Okay, welcome everybody to Wall Street Reporter's next Super Stock live stream, June 16th, 2022. We're back with NexTech AR, NEXCF, Evan Gappelberg, CEO. Evan, welcome back.
Thanks, Jack. Great to be back.
Absolutely great to have you, especially on a day when the market is crashing. The NASDAQ is down 500. It seems like every time you come back in the last few months, the market is down 500 points. But the good news is NexTech is one of the few stocks that is up today, which is, I think, a major positive. You're outperforming the market on a major crash day. And we're going to get into the reasons for that in just a second. But for anybody brand new to our program, our goal is to bring you those stocks which have a 10x to 100x upside potential. These are companies going after massive multi-billion-dollar market opportunities that are at a key inflection point right now, and multiple catalysts in place to ignite that increase in shareholder value. Now, of course, especially we have some Canadian regulations that say we can't make any projections about stock price or say where things are going. So I am not saying that any stock is going up 10x. We're not making any projections, although we have had 9 stocks that have increased 10x to 50x in the last few years, and of course, NexTech being one of them.
Yeah, I mean that was what was that 2020?
20 into 21, yeah, and listen, and I'm not saying that things, but stocks do have a tendency to repeat performance. In my experience, once a stock shows that they could do it, it tends to happen. But look, we're not saying anything, but let people decide for themselves.
It's kind of in their DNA.
Exactly. It's a DNA. It becomes the DNA. It's part of the thing. So let's get into what's happening today. So the stock is up today, which is, again, anytime a stock, is up while the market is down, massively, like, 500 points NASDAQ, Dow is down 700, maybe 1,000 right now. I don't even know. I think it tells you something is going on. So apparently the market is reacting very positively to today's news, which is, Evan, basically 6 weeks ago, you were telling our audience that your goal for this year is to really unleash the value that's inside of NexTech, and you've been doing it. Like, first, you had the spinout, which we're going to get into, the Metaverse map spinout. Now you're sort of jettisoning the legacy e-com business, which has been kind of, I don't know, it's always had that people like it, they hate it, love-hate relationship with the market. So, and the market obviously likes the fact that you're doing this today. So let's get into the reasons. The detail.
So I think it's important, Jack, to talk about the history and perspective, right? So when I founded NexTech back in 2018, it was on the premise that we were going to take on the augmented reality market, create 3D models for e-commerce, and really become the 3D model supplier for all the e-commerce sites globally. That was our goal. We were first to market. And as I've mentioned a few times before, Apple and Google came knocking on my door and told me, hey, great that you're here, but it's really early in this cycle. This was 2019. So I went out and acquired the e-com businesses in 2019. 2020, those businesses exploded, as all e-com businesses did, because of the pandemic and the whole world just kind of shutting down. Everybody was just ordering online. And then 2021 rolls around, and that business started to do okay, but the massive growth from the pandemic was waning. As we rolled into the second half of 2021, really the summer of 2021, we acquired 2 companies that were transformative. One was 3D AI, which is our 3D modeling platform. And that was acquired from, and it came with a guy who was an Apple computer vision guy, who's now our CTO. And the other acquisition was ARway, which is essentially the basis of this spinout. And at the same time, we started to experience some supply chain issues. and contraction in the e-com business. So as our new business, which was really the old business, the original business, was taking off, the legacy business, the e-com business, was starting to struggle with its growth because supply chain issues. It really wasn't anything other than that. And so fast forward into Q4 2021 and now the first half of 2022, those things have become those same two things that were starting to show up in kind of Q3, Q4 2021, the slowing of our e-com business and the acceleration of our 3D modeling and mapping business have now everything that was starting have happened at an extreme. It's now going, the e-com business, we can't get inventory. It's basically what everybody's reading about. It's just a difficult environment for those businesses. And again, that wasn't our primary focus ever. We've always said that. It was just a business that exploded that we ended up owning. Now, our 3D modeling business and our mapping business, which is going to get spun out, those businesses, those core businesses, our core technology, those businesses, which we see nothing but blue sky for the next decade, those businesses are gaining tremendous, tremendous traction in the marketplace and growing very, very rapidly. We reported 300% year-over-year growth in that business at the end of 2021. As we roll into 2022, those businesses are only accelerating. So it seems, Jack, that now is the perfect time for us to grab a couple of $1 million in cash out of our existing inventory, what we have left. We're not going to replenish, and just kind of wind those businesses, the e-com business, down and reinvest that capital into our fast-growing technology business, which was why I started this company. That's why I didn't start this. This whole idea was not to run an e-com business at all. So the distraction is gone. The company's laser focused, and I couldn't be more excited. The whole company's excited.
No, I think. Look, in reality, this is today is like a really transformative day. It's a real game changer because again, the company becomes laser focused, and again, the market is telling you that this makes sense because the stock is. I mean, otherwise the stock would be down like everybody else, 10%. The stock is up. If I think in a normal day, it'd probably be up 10%, but the market, everything is pulled. The Nasdaq is pulling everything down today. The couple things. One is so essentially you're doubling down on the Web 3.0 business. Let's talk a little bit about that. Like what's going on in terms of from the big picture. Like what's the Web 3.0 transformation all about, and how NexTech's role inside of that. Like essentially you're like the toll collector on that highway to Web 3.0. Any e-com company, anybody that wants to get into Web 3.0, which is where everything is going, essentially must pay a toll to NexTech at some point or another.
Yeah, in the
Let's
world
start from the top and then drill down.
Yeah, in the world of e-commerce, there's a transformation happening, and it's moving from 2D to 3D. It's moving from brick and mortar stores to online e-com. It's a $5 trillion mega trend, which we speak about in some of our press releases, that's going to 10 trillion. The 5 trillion is only 10% of the total commerce. So it's growing rapidly. It's unstoppable. I'm talking about e-commerce in general. Even with these supply chain issues, you have brick and mortar stores that are closing, and what they're doing is they're investing more in their e-com business. And I'm hearing this in stereo every week where I'm getting pulled into a major negotiation call with a major brand, a major e-com retailer that's looking for a partner to take them into this world of 3D. We keep getting, we're doing RFPs, which are basically any big e-com site. They basically send out an RFP and invite 2, 3 different suppliers. We are one that gets picked over and over again. They come to our website, they fill out a form, we contact them, they send us RFPs. And so we're in the running for, these are companies that have anywhere from 10,000 to 30,000 SKUs. And so they're looking for, typically it's, hey, if we choose you, it's going to be for 1,000 SKUs, to start. For instance, so we're seeing that over and over and over again. That never happened in 2021.
Oh,
Never happened.
really?
2020. This is all new. This is the moment I've been waiting for. It's here now. We have the ability to scale. We have the technology. If you read our press releases, we launched our configurator, which allows us to change the colors of a single 3D model. So the chair you're sitting in, the couch in your living room, it comes in different colors. We, have technology where we create one 3D model, and then you click on the button and it changes the colors of that 3D model. It's called a configurator.
Okay. And I want to get this. Okay, so you're telling me that right now, like, you're getting much more increased demand for the 3D models than you were getting even at the height of, let's call it the stay-at-home epidemic, whatever it was.
Jack, it's not even close. It's not even close. Back then, you only had a handful of big box retailers like Wayfair that had invested in their own 3D modeling AR technology, or IKEA. But even those guys have now come to market, and they're looking for companies like NexTech. And there's only like 3 of us. Seriously, there's only like 3 companies that I'm aware of that have the tech stack that we have. And out of those 3, there's only 1 public company, and NexTech is that public company. The other 2 are private. Now, when you look at the market today, all these, it transcends it goes way beyond e-commerce. It's not just, e-commerce is a piece of it for sure.
But Evan, I just want to get back into why it's such a big deal for these. Because you're in this, so I don't think you appreciate how big of a, we have to keep repeating over and over to investors so people understand why it's a big deal. Why these 3D models? It's not like a nice to have. It's really a must-have, because 3D models, essentially, it's almost like going from
it's going from a dial-up internet to high.
Not even dial-up. It's going from Morse code telegraph. No, it's going from, again, like I use the example,
horse and buggy,
black and white TV.
Car. You could even see the gasoline car to the EV car. It's a transformational technology, and it
increases sales. Let's go through the numbers.
But I want to take it even beyond that. So yes, increases sales, reduces returns. All of that is valid.
Right, like 100%, doubling.
We just got an order today from a multinational manufacturer for a CAD to poly conversion. Now, they're not e-commerce, right? This is a manufacturer that wants us to take their CAD file and turn it into a 3D model for them, which we can do. And for that's like a single SKU, and we're getting $7,500 for one, right? When you think about all of the CAD files out there, the CAD files are massive. They're massive. It's every little component, every little piece, every little part that goes into the product is in that CAD file, right? And so we take that, so there could be hundreds or thousands of little pieces, and we're able to take that with our technology, with our software, and convert it into a 3D model that's
At
light.
scale, but I think it's important people know is that the difference what NexTech does and anything else is you're able to do this at scale. You know,
At scale,
1,000 SKUs,
yeah.
5,000,
I
500.
want to talk about the CAD to poly for a minute.
Yeah.
So that tech is transformational technology. Today, we have to manually essentially use that tech in-house. The goal and what we're building is a SaaS platform where we can turn the tech over to the manufacturer, charge them a monthly fee of, let's say, $2,500 a month, and they create the 3D models themselves. And they just pay us a licensing fee. And that's the cleanest business you could ever be in, right? Where, you're basically just collecting, like you said, like it's like rent or like a toll. And so we're building towards that. That's not fully formed yet, but we're continuing to invest in this technology. And when these technologies get to the point where they're ready to be commercialized, we might spin them out, because as a standalone, they're more valuable than being locked inside of NexTech, right? So that's kind of the whole.
Especially in about maybe 6 to 9 months. In today's
Yeah,
market, in today's market,
yeah.
technology,
Yeah. But it's all about trying to unlock shareholder value. We have a tremendous amount of technology. I'm not going to say hidden inside NexTech, but certainly tucked away inside NexTech. And as CEO and the largest shareholder, I'm focused on unlocking the value that's tucked away inside of NexTech. And I think there's, I mean, my opinion is that there's over $1 billion worth of value in our technology. Now, how to unlock that, how to bring that to the market, how to get that to manifest in a higher share price. I mean, that's my job. That's what I think about every single day and night and day and night. That's all I think about, is how to unlock that value and how to create, value for shareholders. And so today's press release really speaks to that. It's all part of that goal. It's all interconnected and related.
Okay, so basically, so you're saying that there's about $1 billion in your estimate. Now we're saying that there's $1 billion of value trapped. I don't. Is that the right word? But it's basically inside of NexTech's technologies, right? When you say $1 billion, you're talking about in terms of what the market would pay if they were public companies, separate.
So let me be
Potentially,
clear.
we're not making any
Yeah,
projections.
so I know you get excited when I start using billions, Jack, but I want to be clear for everybody that's.
No, you got to think big. I mean, that's the whole idea. People want,
but it's not that. It's not that. I just want to be clear, is that the $1 billion in value, it's not like if I chopped up NexTech today that we have $1 billion in value locked up here. That's not what I'm saying. What I'm saying is that I believe that we have the $1 billion in value that over the next, I don't know, let's call it 12, 18, 24, 36 months, as we develop these technologies and bring them to market and commercialize them, that we will bring in $1 billion worth of value or more. It could be multiples of that. I don't know. But I know in my mind that that's what I'm focused on. That's what I'm saying, is that's really, there's the 3D modeling business. It's not worth $1 billion today, but I believe over the next period of time, it will be. Our CAD to poly business, same thing. The ARtized maps, same thing. So there's all these pieces of tech inside of NexTech that I'm working on building to the point where they get commercialized, which ARtized 3D already is commercial and in market. Now we're doing the same thing with ARtized maps. And the CAD to poly is now generating revenue. I'm still working on getting some of our other pieces of tech to the point where they're market ready and commercialized. And along the way, Jack, We might do additional spinouts, just like we're doing with ARTized maps. And again, it's all about creating shareholder value. That is it.
Evan, glad you said this. Look, I mean, this is the thing I've always told investors, like, I think for years, my whole life, is the number one, and some people may disagree. A lot of people disagree. People who are wrong disagree. But, I think the number one job of a public company CEO, a guy running a public company, the number one job is to make the shareholders rich, right? To maximize the stock price. That's the job. Maximize the stock price, create shareholder wealth. Yeah, they call it shareholder value, shareholder
Yeah.
wealth. Make
Yeah.
the stock go up in
Yeah.
plain English. That's the job.
Well,
Now, how they do it, there's multiple ways. Is it
Yeah.
you build a business, but
Yeah.
you got to think with the end goal first. I think anybody who's successful, they think from the end first, right?
Yeah.
They think, okay, how do I make $1 billion? And from there, they go backwards. Okay, I got to start this business. We got to do
Right.
sales. Blah blah blah
Right.
blah. And a lot of guys, I think, like, the guys who build these massive companies, they start with that. But I see a lot of, especially in the micro cap or in the mid cap space, a lot of these CEOs, they get kind of trapped into their small time thinking. Oh, incremental, we're going to do this, and they focus on 20%. And the stocks never go anywhere because all they think about is their little operation. They don't think from max, what they need to do to maximize. And of course, look, maximizing a stock with all these, it's not about doing these live streams. It's not stock promotion. It's not. In reality, you're gonna have to do a lot of work with all these.
Yeah.
But the thing is, people need to understand the value that you're bringing to the stock is that you're thinking which businesses, which decisions to make in the actual business, which can result in the most potential value being created 6 months, 12 months down the road. Because right now the market it's a disaster.
Yeah.
But you're thinking, when we come out on the other side of it, what are things going to look like? Because the guys who are going to be making a lot of money in 2020, they're planting the seeds now. This is right now is when the big opportunities are created. The investors who are watching the live stream today, right today we have maybe 30% of the audience we had 18 months ago during when everybody was buying stocks.
Yeah.
And these guys, I think they're going to get rich. The people who are watching, who are following the micro caps now, this is the time when the values have been beaten down, decimated. This is.
Yeah, I agree. And just to add to what you're.
By the way, we're not making any recommendations. Just I want to be clear.
Just to add to what you're saying, Jack. So, every day I spend my day in back to back meetings with my leadership team about building the business, about closing deals, bringing products to market. What are we investing in? What's our burn? What's our budget? What's our revenue? How, what are the metrics? We're constantly looking to see how we can improve our close ratio, how we can improve our lead gen, how we can improve our website. I mean, I spend an enormous amount of bandwidth and time on that. But back to increasing shareholder value. In my mind, I'm always thinking, my default thinking is, how does all of this benefit our shareholders? Again, largest shareholder sitting right here, right?
And this is the thing. What I always say is, I want the CEO focused 100% of the time. I mean, like, I don't want any hobbies, nothing. Make the stock go up.
Right. So I want to be clear. I don't really have hobbies. I'm a workaholic. I work to try and increase shareholder values. Occasionally I do take a vacation. I play tennis, for an hour.
You gotta do some exercise. You gotta stay healthy. But
walk my
no
dog
golf games, no 4-hour golf games.
No, but I do walk my dog every day. And so that's like an hour, kind of thing. So I have these activities, but they're all everything kind of revolves around my business. Sometimes my wife says to me, you're acting like a CEO at home, and like it's not like you're not in NexTech, right? So it does bleed sometimes into my personal. But my point in sharing some of this with you guys is that I'm completely focused on this business and completely locked in on the goal, which is, as you keep saying, Jack, increase shareholder value, increase shareholder value, increase shareholder value. How you do that is very hard work, day in and day out. That's how you do it. How you do it is by being almost maniacal about, attaining goals, eating, sleeping, drinking, all day, all night, the business and how to get this increase in value. And so, I think everybody already knows that about me. I don't think this is any new news, really. Anyone who
We have new
knows.
people watching these things all the time. But which I should also mention is, a lot of CEOs, when the market is up, we see one of these live streams when stocks, everybody shows up, right? You know who the real guys are. The real guys is when the market is down. The guys who show up doing the live streams when the Dow is down 30%.
Yeah, yeah. You can't be a fair
They're not
weather.
hiding. They're not like
Yeah,
turtles or what do they call the
yeah.
ostrich in this. They're out there
You
answering
can't be a fair
questions.
weather. You cannot be a fair weather CEO.
Yeah,
It's when we're in the time we're in today. I've been through a couple of these bear market cycles, and it's very interesting. It's never pleasant. I find it interesting that things are now happening at a much faster pace. These things used to be more slow motion, where you would have time to, let's say, get out or get in. But everything moves very, very rapidly today. I guess because it's computer driven. It's not like a person, where it would take a person time to calculate and figure things out. In today's market, it's all algorithms and computer driven. So everything happens instantly. What I'm preparing for is right now we're in the middle of the storm. I'm preparing for when the storm settles, when the market stabilizes, and when that happens, nobody can predict. Usually it's a couple of months worth of a cycle. Hopefully, it's not a couple of years, but you never know, right? My thinking is that we're going to keep on focusing on what we just talked about, increasing shareholder value and how to do that, even in a down market, even in a down market. And when the market turns, we'll be so prepared, so well positioned, is my thinking, that we're going to turn faster and go up faster than anybody else because we're preparing. We're already going to be prepared. We're ahead of the curve
yeah.
in our thinking, and
There's a
that's
lot.
kind of, I think, the key takeaway here is that everything we're doing today is in preparation for the next bull market. Now, we're talking about stock. In terms of the company, in terms of our day to day, again, my day to day is not the stock market. My day to day is building the business, and the stock market does what it does. So today, I'm focused on sales. I'm focused on marketing. I'm focused. This spin out, by the way, is going to take up more and more of my bandwidth because it's literally going to be hundreds of hours of working with my finance team. We have to get an audit of this AR way. It basically is a carve out, audited financials. It goes to the regulators. The lawyers are involved. The regulators, the lawyers. It's
We got a bunch of questions. I'm going to get. We have some audio. We have some live audience questions, and also a bunch of questions that came in by email. So I want to get. We're going to get into all the questions in just a
yep,
little bit.
yep,
But I think that, you you're making a very valid point. Like right now, you're preparing for when we come out to the other side of this, because every market turns, up and down. It turns, and I think that the key is, and I've used this metaphor, is it's like surfing. Like, if you want to catch the big wave, you got to be in the water waiting for it. You got to be in the
yeah,
water. You
yeah.
can't be on the beach, on the sand, and then hope to run. By the time you get there, it's too late. You're gonna get
Like,
the.
yeah,
It's gonna wash over you.
exactly. And I just want
But
again
the
to
same thing with
reiterate.
investors. They got to be
I
in the
just want to
water.
reiterate again is that I'm always thinking a few steps ahead. If investors remember, in Q4 I raised 5 million, with HC Wainwright, and then in January I raised another 10. Why did I do that? I mean, honestly, it was because I saw the storm clouds forming. I knew the market was going to be difficult. I didn't know, what was going to happen, but I felt like the capital markets were things were getting a little rough out there, and I wanted to make sure that we had enough capital to last through the storm. And so I did that strategically. Now, it's been painful because we all know that fund.
It's by the way, at the time you did it, people was like, "Oh, this is crazy. Why are you raising money now
Yeah,
with these assholes? That's
yeah,
they're gonna be shorting
yeah.
the stock."
Try and raise money today.
In six,
Good luck. You
no,
can't.
you wouldn't be
You
able to do
can't.
it, right? The
You
market's
know.
basically shut
Yeah,
for
yeah,
microcaps.
yeah. So raising that money was the strategic move. It was painful, but it would have been more painful if I didn't.
Right.
So, okay, it was painful, but it was the lesser evil. Now we're positioning for the next upturn. When that happens, I'm predicting that we're going to have a tremendous, tremendous rebound. It's going to be fast and furious. And again, it's preparation that positions you for the upside in life. In life, this isn't just about business. In life, you got to plan. If you're going on vacation, you got to plan your trip. If you're going to do anything in life that you want to be successful at, in business, obviously, you have to have a plan, your 12-month plan, your budget, and obviously sales goals, et cetera, et cetera. So planning is critical, and I do a lot of that at NexTech.
Yeah, it's interesting. I think people should realize also that you've been ahead of the curve in many. The whole work from home, the
Yeah.
online events business right before the pandemic. A lot of so it's you were early into a lot of things, and I
Yeah,
think
there's a
now
track record
there's a
of
track. Right,
planning.
there's a
I mean,
track.
and so it's interesting because I was a little early, as admitted, with the 3D modeling
The
business, but
3D
it's here
models. Yeah.
today, right? I was a little early with, let's say, when I bought the ecom business in 2019, but then it took off, right? And then if you look at the virtual events business, took off. Not everything is sustainable. I mean, some of these things are short term. I get that, but I'm constantly thinking strategically how to position the company and its investors for the long term. And I think right now, Jack, we've never been as well positioned as a company between our laser focus on our 3D modeling business, between the market finally catching up to our technology, between our cash position, which is strong because we raised the money in the beginning of the year, and we're actually bolstering our cash position with today's announcement, selling off our inventory and using that to reinvest in, and then our spinout. I mean, all these things are strategic. All these things are geared towards increasing shareholders' value. And at different times, Jack, the value has gone, sky high. And now we're on the other side of that, but we're preparing for the next bull market.
And look, it's like the Wayne Gretzky analogy, which is you got to be where the puck is heading. You can't be chasing after the puck. So right now, essentially the idea that you're saying is, look, you're positioning NexTech to be in the right place once the market turns, because I think it could be in 3 months, whatever the number, it could be 5 months, but at some point the market's going to turn, and e-commerce, the companies are going to come out ahead. The ones that we're going to see massive growth in is going to be the ones that are embracing Web 3.0 with 3D models, with this whole new way. Again, we're really going into a complete transformation of the web. Everything is going to this kind of 3D
Yeah.
metaverse universe.
And, and
It's
Yeah,
happening like
and you could
people
see
don't
you could
notice
see
it.
it. Let's put a finer point on it. I think it was this week Amazon announced that they're now offering virtual try-ons of sneakers in their app. So they're now offering an augmented reality virtual try-on of sneakers and shoes this is Amazon. That's the tech. I mean, we build the 3D models. That's what we do. So, these virtual try-ons only work if you have 3D models. So the point is that if you look at Amazon and you look at some of these other big names out there, Shopify has announced the future of e-commerce is 3D. They're all positioning for what we keep talking about as Web 3.0. It's happening. It's not us talking about it happening. It is actually
Yeah,
happening.
it's just listen. It's just like in 2009. During the depths of the whole market crash and everything. Social media was happening, and the ones who were already on the other side came out as Facebook, Snapchat, Twitter, everything came out, but it started happening right in 2000. The great companies really started being built in that 2008 time period. And the same thing is happening right now. So I think let's get into some audience questions. And I want to, and then of course we got to talk about the spin out, the spin out. Actually, before we get into all the questions we got with everybody, let's talk about the the metaverse mapping spin out. Exactly what is it? We had the demo. Paul did the demo, so anybody they can watch the demo on our site on YouTube. But let's talk about that spin out.
Yeah.
Exactly. What is the business? Mechanics of the spin out. What are investors going to have?
Yeah. So the business is real world spatial mapping. So we could map an arena, a stadium. We're talking about the insides of a house or a building, or again, arena, stadium, museums, college campuses. It could do outside as well, but it works best inside. And so the idea is we have the technology to create the spatial map, which is essentially a 3D point cloud. And then we have a studio, which allows you to drag and drop in and populate the map with 3D assets. That is an unheard of end-to-end solution in the market. The only other competitor would be this company Niantic, which happens to be worth over $3 billion, and they have this platform called Lightship. And those guys are the guys that created Pokemon Go, and so they're in market, but their focus is primarily on gaming. So we're in a leadership position with ARitize Maps, and we're getting an enormous amount of interest. It's based on ARway, this company we acquired, the other transformational acquisition we made in the summer of 2021. We paid $1 million for that business. It was, very early stage startup to 18-year-olds. These are, young guys that had been working at this tech for a couple of years. And we brought them in. They work for us now. They're really smart kids. And now I think one of them just turned 19. And so they're
this business. I mean, people can see the demo, but essentially it's sort of like a Google. It's sort of like what Google does for search. You're doing for physical spaces inside those physical spaces. So,
not search, maps.
Mapping. What Google did but you're doing indoor mapping. Like, let's say somebody's at a trade show, they can see where everything is in. But most importantly, it gets monetized because we can serve up sponsors, ads,
exactly.
Or cross-selling opportunities. And this for stadiums. It could be a huge business, especially
and very scalable, because all we do is we've created the studio, we created the app, and then we give it to you. We give it to the creators, we give it to the sports teams, and they create the content. We don't create all the content, which means our cost structure is very low. Our margins are going to be, on that business, 90%. It's going to be, pure software, and it's SaaS. It's going to be monthly recurring revenue. So It's an exciting business. It's just being commercialized now. Paul Duffy is going to be running that business. There's a team of about a dozen really smart people there, and couldn't be more excited about the prospects. We just hired our first sales leader, and we think there's going to be some big announcements on that business soon.
Okay. Now, okay, so if somebody owns, let's say, 1,000 shares of NexTech, how many shares of the spinout will
Yeah.
they get?
So the current structure, and this is subject to change, and if it does change, it will only get better for shareholders, meaning that there will only be more shares that they will get. They'll never get less than what we've previously announced. So we've announced 1.6 million shares will be distributed to NexTech shareholders. So if you use the number of shares outstanding, which um, let's just say is 100 million, it's 1.6%. So every 1,000 shares you would get 16 shares.
Oh, okay, okay, okay.
Right? For every
Yeah.
1,000, you would get 16, and this is a minimum, meaning it might go up. We're still negotiating with regulators. I would say that. So the difference is that so NexTech shareholders will get a dividend, and then NexTech will control a very large block of stock in that spin out, and it'll be 10 million plus shares, let's call it around 50%. And so that block will sit inside NexTech. And
Mm.
as that company becomes more and more successful, and they're going to have to raise money, they're going to have to dilute and invest and invest and invest, so it's a process, just like NexTech had to raise a whole bunch of money. Any new spin out will likely have to raise money, and so that is going to happen. And as that happens, that company's value is going, as they land deals, is going to increase. And as it increases, NexTech's 10 million shares will increase in its value. So if, let's say, the spin-out company stock trades at $1, that would be worth $10 million to NexTech. Now, that's totally independent of the dividended shares. The dividended shares go to the individual investors who own NexTech shares. If you don't own any NexTech shares, you will not get any dividend. It's really that simple.
It's interesting. NexTech originally was a spin-out from another company also, right?
It
And
was.
that did very well, right? NexTech was, and what did NexTech start off? It was basically free in the beginning,
So,
right?
so NexTech was a spinout, just like this is a spinout, and the shareholders of the company that we got spun out from got free shares in NexTech, just like NexTech shareholders are getting free shares. The price of the IPO of NexTech was 25 cents a share. The price of this spin out, ARway Maps, is going to be 25 cents a share. NexTech stock went from 25 cents to an all-time high of $10. It's possible history repeats itself. I can't predict. All I can say is that I have done this before, and it was wildly successful. That's all I can say, is that I have done this exact same thing before, and it was wildly successful. I'm going to be involved more on a corporate, finance basis. Paul Duffy is going to be the CEO. He's going to run that business on a day to day. I'm going to be chairman of the board, and I will help in decision making, but primarily I'm going to have Paul who's very, very capable
Yeah.
and has a tremendous track record of success in the world of technology. And so he's going to be driving that business. And I have no doubt that that business is going to be a success.
I mean, in theory, I mean, we're not, but in theory, let's say if history repeats and the spinout AR maps also, like NexTech, if that becomes $10, then your block, that 10 million shares, is $100 million, which is worth more than the value of the stock, double what the stock is today. We're not
Exactly.
saying it's going to,
Yeah.
it happened in the past.
Yeah.
Could it happen?
Yeah.
Who knows?
Yeah, exactly. So if you think about it, if I'm an investor in NexTech, which I am, so now I get two ways to make money. One is the spin out, ARTized maps, right? You're going to get a dividend and you'll own shares for free. And two is NexTech and our 3D modeling business. It's, yeah, I mean,
And then there's also a couple of other. You have a couple of other. And
we do have a couple of other, but the thing is, Jack, is that what I've noticed is that we got zero valuation for ARTized maps inside of NexTech.
Right.
And I feel like, to unlock the value, back to that, to create shareholder value, it needs to be a standalone pure play. Pure plays are the ones that analysts are able to analyze. Pure plays. When I
It
talk
makes
to
it easy for
analysts,
them to understand. You got to
very
make
easy.
it easy. The easier,
It's like,
simpler.
hey, what's your business model? And, what's your profit margin? Super easy to talk about it when you have one business. When you have four businesses like NexTech, where we're owning and operating multiple.
You get valued for only one. I mean, or not
valued.
even like a percentage of one.
Yeah. It's very hard. The analysts end up default. What ended up happening with us a lot of times is the analysts would default to where's most of your revenue coming from, and so it was e-com. Okay, so then that's what we'll look at, and the other businesses, they
And
don't get
e-com
much value.
would never get a good valuation. The e-com business has always, it's a kind of a low value business. So that's always
Yeah.
So the big story
Yeah,
now, really.
actually, Jack, let's talk about that real quick. So the e-com businesses typically are valued at like 3 times revenue.
Used to be,
Right? Tech businesses, pure plays, 10 times, 20 times, 50 times. I've seen 100 times revenue, but none of them are at 3 times. 3 times is very, very low. And so, we were being penalized because our revenues were primarily coming from e-com, even though our tech stack and our growth is in these transformative Metaverse
it's like
businesses.
a giant. It's like you got a hot air balloon and you got 5 giant refrigerators hanging on, which are keeping you from going up. Once you drop them, once you jettison, the balloon can go up. This is and now it's so the big story is
better than that. Yeah,
pure play.
Yeah, it's better than that because we're not really jettisoning refrigerators as much as as much as it was kind of like we had, like, let's say 4 hot air balloons co-joined, right? And they were kind of like, well, what the heck is that? And I'm like, well, these are four rocket ships, but you don't really get the credit, so you separate them, and all of a sudden the balloons can take off and these businesses can take off. And that's really the premise behind these spinouts is there's going to be a renewed focus on just those businesses by Paul. And I'm going to be able to focus on creating shareholder value, building our 3D modeling business. I feel really good, Jack. I really do. I mean, I know the market's shitty, the economy's shitty. Looking at my real estate, I'm like, geez, like it would have been great to sell, a couple of months ago. Looking at my stocks, geez, would have been great to sell a couple of months ago. But at the end of the day, if you've been around long enough, these things are cyclical. And when things do turn, you'll have one of these, rip your face off rallies in the market, and everybody will be clamoring to get back in at some point in the future. And real estate does have a way of kind of working itself out. So I'm still very optimistic about the future. Our business is strong, and I really couldn't be more excited, Jack.
Okay, let's get into some audience questions. Let me see if we can start off. I'm going to start off with the questions that were emailed in. So we talked about question number one. In order to get the shares of the spin out of the AR maps, is there a cutoff date? How long? So basically, how long can we buy shares before we can? So basically, when is the cutoff date in order to get the shares?
Yeah, I haven't announced that yet because I don't have that yet. But I can tell everybody that's listening that I will announce it as soon as I have that date. But I do not.
By the way, one thing we didn't even talk about today is the big fund that bought the financing back in January, the hedge fund, which they were like liquidating everything, and I think they're done. I think they were basically pressuring the stock for the last 5 months. I mean, they're just.
I think last week Thursday we had a washout. I think we traded almost 2 million shares, and it looked like that was a classic. Sell everything that they had left.
Yeah.
Moment. And I think that selling is done. The selling pressure is pretty much off. You could see the volume has subsided a bit, definitely on the sell side. And I would say they're out.
We could. So I think I would say, look, any type of positive things happening right now could be reflected in this. At this point, there's nothing weighing it down. So at this point, I think
there's no artificial pressure.
Yeah.
Okay. On the stock.
What is the ratio of shares? Okay, we talked about this. So the ratio is approximately your 16 per thousand, approximately.
Approximately. It could go up.
So what's the ticker symbol for the new spinout? Do you have a ticker symbol yet?
I don't.
What is the reason for the spinoff at this time? Why now and not, a year from now or last year? Why now?
The timing is now. Again, we're unlocking our shareholder value, and right now we're doing this spin out because the product ARTIZE Maps is ready to go to market and be commercialized. It's now just ready. It took us almost a year to get it here, and now that it's ready, we're ready to spin it out and see it stand on its own 2 feet and become that pure play technology company.
Okay. Next question. Okay. Is the spin-off going to be on a TSX?
TSXV.
Okay. The TSX Venture Exchange. Okay.
Yeah.
How much more focus does the spin-off lend to NexTech to optimize the remaining tech stack?
The spin-off gives us the ability to, well, it's not just the spin-off. The spin-off plus today's announcement, where we're winding down the ecom business, it basically leaves us with our map dynamics, event software, as well as our 3D modeling business and all the technology that's tucked away in our 3D modeling business, which includes the CAD to poly. So these moves allow us to be very, very focused on our core business.
Okay. Here's a good question. Provide an update on NexTech's business. I guess the business tech stack after the spin out of the after the ecom and everything. So what's working, what's not, what's being done when they aren't working. For instance, I would have thought CAD to Poly would have been an instant and ongoing hit since it was announced, but since then, almost nothing in terms of news or success stories. Yeah, how come people haven't been hearing about the CAD to Poly?
So let's be clear. There is no instant successes in business. If you want an instant success, go buy a lotto ticket. Everything is hard work. Everything takes time. And so it's important that investors understand that. ARTIZE 3D is something that took us, 9 months to get here, where now it's, the lowest cost provider, the most scalable solution of the highest quality 3D models, and we're signing, we're signing up deals. ARitize CAD is a piece of tech, as mentioned earlier on this show, that allows us to take CAD files and convert them. We can do that now. We are getting business today, but it's not at the point where we could turn it over to a customer and let them create 3D models. And so that's something we're still developing and something that we're still working on bringing to market.
Mike is asking, just wondering if everyone can comment, if a possible recession is being taken into consideration, and how would that affect the 3D, the 3D model market? Because it's e-commerce basically.
Yeah, I mean, think about it like the way I think about it is, it's an unstoppable trend. Like companies are not going to stop investing in parts of their business where they get a high ROI, where there's 40% lowered returns, up to 250% conversion rates. Those numbers force e-commerce retailers to continue to invest in the 3D models. And so,
especially when your competition is doing it,
Yeah, the competition's doing it. We've made it affordable at, $10, $15, $20 per model per month. So you don't have to spend tons of capital up front. If you think about paying us over time, that's how you make your money in e-commerce, right? So every month you're selling 10, 20, 50, $100,000 worth of goods or whatever the number is, and you're paying us a couple of $1,000s to help you sell more product every month. You pay us, as opposed to pay us 100,000 today and you'll get a return on your investment over the next 12 months. No, we understand how e-com works, right? We own an e-com business. That's part of the benefit, is that we understand our customer better than any of our competitors do, because we've been in that business. Having them pay us monthly works really, really.
Yeah, I think also, to answer that question, I think what happens, because the 3D models, if you look side by side, let's say if you're on Amazon, right, and you see somebody showing a 3D version model of a product, and the other guy isn't, your eye, naturally, you're drawn to the shinier thing, which shows the product off better, right? It's sort of like you're walking down, Madison Avenue, side by side. You see two stores selling the same thing. One has, a dusty window that hasn't been cleaned in 6 months, and the inside is a mess. And the other one is like shiny, windows are clean. You could the set, everything is dressed, things are set up to beautiful display. Where are people going to walk into? You're going to walk into the store that looks better. So the same thing here. I think people are just, I think this is one of those things where they're less likely to cut costs, because it's just, they have to do it just in order to compete, in order to have people walk in through that door. They have to have that 3D. It's becoming a must-have thing. It's going from a nice to have to a must-have because of the competition.
Yeah. I mean, look, anything, are you going to, it's kind of like, going out to dinner or going on vacations. You still do it in a recession. Maybe you don't go out to dinner 5 nights a week. You go out 4 nights or 3 nights, whatever your lifestyle permits. But you're still going to do it. When it comes to 3D models, yeah, it's possible things slow a little bit, but we're starting at such a low number.
Yeah.
It's like 0.5% of all the 3D models that need to be made have been made. It's so tiny that for us, I don't think it really matters that much that the economy slows, because for us, we're in the very early stages, so we're going to see hundreds of percent growth. Yeah.
Oh, a question, Evan. Great progress today. Can advertising accounts create their own 3D models from photos, or do you have to create each one?
So advertisers can, we create the 3D models, and then they could take those 3D models and use them in ads.
Question. So Shopify, they have 3.5 million merchants. So if 5% of these sign up to NexTech to use 3D models, right? 5% of them sign up. That would be $175 million per year. Can you
Yes,
comment on this?
I think your math is right. I mean, yeah, I mean, that's why I'm here, is that the opportunity is huge. And, we charge more than $1,000 a year. Our minimum is about 3,000 per year. Our average is really now at about 10,000 per year. So obviously, a lot of the merchants on Shopify are relatively small.
Right.
There are some small players in there, but what we're finding is that right now, the mid-size, the middle of the market, the $100 million merchant, maybe not the multi-billion-dollar merchant, those are the ones that keep washing up on our shore. Those
Ah,
are the ones that keep on coming back to us, and they're super, super enthusiastic and excited about the tech that we offer.
okay.
We just keep getting rave reviews. We keep getting customers that sign up for 50 SKUs to test us, and then they come back and say, "I want 500."
Mm,
That's kind of our sweet spot, is that we're seeing a lot of that kind of business, and then even the 1,000 SKUs that want to take it to 5,000 and 10,000. So, I mean, everybody, I think, needs to agree that 3D models are here to stay in e-commerce. Shopify's 3.5 million merchants over time will all have 3D models. It's not really a debate. It just isn't.
It's like saying, are they going to go from, black and white photos to color photos?
Yeah. It's
It's
like,
from black and white TV to flat screen color TV.
yeah, I just don't think it's a debate anymore. I think it's really the train has left the station. It's just a question of timing. That's it.
Jeff is asking, I wonder what percent or what fee is lost to shop. I guess he's asking, does Shopify get a fee?
They don't charge a penny. I was surprised myself. I thought that they were going to be like Amazon and take a slice of the pie, but they do not. So
Because
they
it
don't.
drives their sales, I guess, right? It
I
helps.
mean, I think it's more like it increases the stickiness of their platform. Like they just have more and more services.
Question: How does Evan see integration with WooCommerce, Magento? These are the Shopify's of Asian
Those
market.
are those are imminent, imminent, imminent.
Imminent. Okay. Let's see. Michael Mahendra, Evan, you have a great track record in bringing the stock sky high. What can investors expect in the next 2 to 3 months in terms of share? Oh, we can't. We can't talk about share price, right, Evan? We can't. The Canadian
No,
regulations.
no.
Michael,
Look,
you
I
should
mean,
know. You're in Canada. That's the
Michael,
nanny state. They prevent us from.
Michael, it's a
Oh,
fool's game to try and predict, the next 2 or 3 months. So it's more important to think in terms of the next, 2 or 3 years, and over the next 2 or 3 years,
no, let's say not 2. Let's say 12 months. I think the market will. I'm willing to say. I'm willing to say that the market will be higher in 12 months. I'm willing to bet money that the market will be higher in 12 months than it is today.
okay. I'm
Significantly.
I
The
Yeah,
market. I'm saying I don't want. I'm not saying next tech. I'm saying just the market because we're at the bottom.
yeah. I
I
mean,
don't have any price predictions.
historically, look, as soon as the Fed gets inflation,
Yeah.
under control, or the war in Ukraine ends, one of those two things, and I think the market will rip higher. I agree.
I mean, it could still drop. I mean, but in terms of the micro caps, I would say if we're looking at micro caps, including NexTech, have been in the bear market for, let's say, 18 months now, since February 21, roughly. So it's we're 18 months in. It's not going to go for 5 years. It might go for another 6 months. But things are already bought. I mean, right? NexTech today is. I mean, we're not far
Yeah.
off the all-time
Yeah,
low. I mean, it's
I would say if you look around you at the carnage, things have stopped going down pretty much. Things have now,
micro caps. The micro
yeah,
caps.
micro caps. I'm saying, like, look, the big cap stocks are driven by liquidity and algo trading, computer trading, and ETFs and
Still a
mutual
lot more,
fund
there's
liquidations,
still
all
ways
that.
to go
We're
down.
not subject to that so much. I mean, some of the computer trading, but not ETFs or anything like that. So I would say that it looks like the small caps, like you said, Jack, are already down 80, 90%. And they're just kind of flatlining now, waiting for the next bull market. Like you said, you got to be in the water if you want to catch the wave. If you're, on the beach, you might miss it.
Yeah, no, this is so it's going to be probably a matter of time. It could be I don't know, it could be weeks, months, few months before we see because there's going to be some sort of catalyst that's all of a sudden going to get people excited. Well, they're going to get excited about tech stocks, then microcaps, and there's going to be something new. And let's say I don't know, something's going to happen with. I mean, Evan, you've been in a lot of these trends very early. So all of a sudden, let's say something happens in e-com or one of these companies goes IPO, whether it's that Niantic or somebody, and then says, "Oh, where do we find the next one?" And the only one left is next.
NexTech, yeah.
And that's what happens every time. It's crazy. Okay, so let's see. Sean, I don't care about the stock price. How many models do you have total in Q2? How many do you expect in Q3? I like this guy. Get right to the bottom line.
So we have over 12,000 models that are in market today. We are gearing up for a surge in Q3 and Q4. Right now, we are seeing, we're going through, as I keep mentioning, testing, meaning we're getting orders for 50, for 100. Hey, we want to see how you can deliver that to us. And after that, we're going to come back and ask for 500, 1,000, 2,000, whatever. So in these early, the first half of 2022, lots of testing and some reorders. As we get into the second half, Q3, Q4, those tests are going to turn into much, much bigger business for us. So I see us, doubling, maybe tripling that number as we roll into 2023. And as we, continue in 2023, I mean, it's hard to predict, but I think we're going to hit 100,000 models in 2023. And if you do the math, that's big revenue for NexTech. So there's a lot of
potential. So if somebody doesn't, what's the number? If 100,000 models would generate how
well,
much approximately?
yeah. So I mean, if you multiply that by $10, what does that come out to per month?
$1 million a month. $1 million a month, right?
Yeah. So that would kind of be, the low end.
Okay.
Because we get somewhere between $10 and $30 per model per month. It just depends on the complexity. So if we could achieve that target, and I'm not guaranteeing that we do, I'm not guaranteeing that. I'm saying I can see that as a scenario that happens in 2023. So this year, it's kind of build our customer base, continue to prove the value in the market, get the reorders. As we go into 2023, we'll have our existing customers, plus we'll be locked in. And I think our brand will become much more recognized in the market as the go-to supplier of 3D models and augmented reality experiences in e-com. And I think that's going to play out in a lot of different ways. If you look at ARtized maps, I think there's an application there for e-commerce, in-store activations, and all those in-store activations are going to want 3D models. So it's not just what's visible today in signing up e-com sites. It's also the leveraging of ARtized maps and the demand for 3D models and holograms within those maps. So there's things that are known and things that are I'm kind of seeing are developing that I think will drive the demand.
A couple of people asking some similar question. How many licenses do you have that are making their own 3D models versus, so the self-serve, how many, and how is that going?
So the self-serve has not taken off yet. The self-serve, what we found is that people, I guess, are a little lazy, you know, or they don't understand, the tech. So what we're finding is that we have to do the integration. We are essentially a white glove service provider. So the self-serve so far has not really taken off. That doesn't mean it won't. It just means it hasn't yet. We are positioned for when self-serve does take off, but so far, not so much.
How has the AI improved with ARTIS 3D since it was acquired? Is the AI improving?
The AI is constantly improving. It's a never-ending kind of learning for the AI. It's one of those things where until it sees every product that's ever been made, it's never going to end. It needs to be able to be in the market for a long time to be able to, let's say, achieve its ultimate goal, which is to be able to recognize every single product. So it's never ending.
Question from Boris. Your operating cash flow is constantly negative year over year and getting worse. How can the stock price increase under these circumstances?
Yeah. So Boris, I think you might not understand the technology world. We're building tech. We're investing in our business. We're constantly investing. It's not about, if you want to look at our year over year balance sheet, or whatever numbers you're looking at, you probably are thinking that we're a more let's say developed company, where we're Coca-Cola or McDonald's or what have you. But that's just not the case. We're a startup and we're just getting started with our business. I think you should tune in and really check our numbers out in 2023 and 2024 and 2025, when we're a much bigger company generating tens or hundreds of millions of dollars in business. Right now, it's way early for you to start analyzing those numbers. So you're investing in the future. That's what you're investing in.
I think this is the thing people need to understand with micro cap stocks, or penny stocks, what have you. Essentially, it's public venture capital. I mean, these are the early stage companies. I mean, companies that you see going IPO, like these alleged startups on NASDAQ. Yeah, some companies were started 7, 8 years, sometimes 10 years ago, whatever it is. And they had negative cash flow for the first, maybe even 7, whatever the number is. Finally, they go public. What you're seeing now is the tip of the iceberg. You're not seeing everything that. So NexTech is only like, what is it? NexTech is really like 4 years old, basically, pretty much.
Yeah, well, I founded it in January of 2018. We didn't actually conduct business until 2019. I mean, 2019 is when we really started. But if you look at today's business, the 3D modeling business, and the ARTIS maps, that business started 9 months ago. 9 months, Jack. That's how old those businesses are, and those are the businesses that we're really talking about today.
Yeah. So essentially, people, again, this is it's NexTech. It's public venture capital. That's what this is. When you're buying this stock, It's essentially it's a venture capital investment, which is liquid. You could buy and
Yeah,
sell, 2 minutes
yeah,
later. But
and it's
it is,
important.
yeah,
Yeah,
it's not a
so
dividend paying stock. Although the
yeah,
spinout technically is a
yeah,
dividend.
and so just to put a finer point on what Jack's saying, because it's a very, very valid comparison. Venture capital, and I have a friend who is a venture capitalist. They look for 100x. That's what they invest for. Most of their investments don't work. The ones that do go up 100x. So if you think of small cap stocks in the same way, a few of them, and Jack's really the guy who has brought this, I think, to most investors' attention, this 100x thing. 10x is actually small
Yeah.
for venture capital. 10x is almost a
It's for
fail.
bikers. Yeah,
It's
really.
almost a fail for venture capital. So, I like to call it adventure capital
Right.
because it is an adventure, right? You're going on this adventure. You shouldn't confuse this with established public companies. That's not what you're invested in. You're invested in, like Jack said, public VC gives you the opportunity to make 100x. The difference is you control whether you buy or sell, not a VC guy who has a portfolio and he decides when it goes public, when it liquidates, when you get your money back. In this instance, you could buy NexTech, sell NexTech. It's up to you, but know what you own. Public VC capital companies, so all small caps, micro caps really, they have the potential for 100x. They also have the potential to flop. Yeah, it's like, so you're betting on what, Jack?
Essentially it's listen. You're betting ultimately. You're betting on the management. You're betting on really
The
on
jockey. You're always betting
yeah.
on the
No,
jockey.
listen, and we've seen. Look, this is the thing. We've seen essentially. Look, people buying next, like they're betting on a winning jockey. That so far is we've seen this thing. I mean, listen. Right now, the market is down, the stock is down, everything else. But the decision making process, the decisions that you're making that have got to the stock in the first place, the 20x or what, you're making the same type of decisions now, which are going to hopefully pay out in the next, once the market stabilizes. It could be 2 months from now, whatever the number is. It doesn't really matter. But it's at some point when it turns, people are going to be looking for Web3 stocks.
Yeah.
It's like
Yeah.
it's
Yeah.
just it's a question of time, in my opinion. Again, I could be wrong. But let's see. Question here. Oh, should we Nasdaq? Let's.
Yeah. So
People,
the
people.
superhero fan. So Nasdaq is not the priority here as one of our investors. So
Today.
let's just be real. Okay, let's just be real. You want to keep bashing me about Nasdaq? Have at it. If that makes you feel like I don't know, you got me. But here's the reality: when we applied to Nasdaq, the stock was $5-6. Our market cap was a couple of $100 million, and it made perfect sense at that time to apply. And we did think, based on feedback, we were going to get approved. Fast forward today, our market cap's 30 million. The stock's 30 cents or whatever. It doesn't apply. We don't. The Nasdaq has essentially at this point doesn't make any sense, and so it's not my focus today. The market conditions have changed, and there's nothing I can do about that. When market conditions get better, I can assure all of our investors we will go back and engage.
It's not even it's not even a catalyst right now. I mean, there's other things which
No,
can move
I'll
the
tell you
stock.
what. I'll
Like,
tell you what. Talking to other public company
mm,
CEOs that are on Nasdaq, they're struggling to stay on Nasdaq because the market has pushed their share price down so low and their market cap so low, they don't qualify. So they got on and they're being pushed off. So, it's like you have to maintain a very high level of market cap, and price, to remain on Nasdaq. And so be careful what you wish for. If we had gotten on Nasdaq, let's just say, guess what would be happening today? We'd be getting delisted. I mean, I hate to say it, but that's what would happen unless
There's a
we
lot of
did.
stocks that are going to be about to be delisted right
They're
now.
getting delisted. Yeah, I mean, so it's a very, very competitive, environment out there. I'm happy with where we're at right now on the CSE, on the OTC. I feel like we're in the spot that we are kind of
Yeah.
positioned for, and in the future, obviously, we are focused on increasing shareholder value. Nasdaq is a piece of that, but today it doesn't make any sense.
Yeah, and again, listen, there's plenty of stocks that we've seen, even including NexTech, that have increased 20x being on over the counter, being on CSC. You don't need. I mean,
Yeah.
Nasdaq is great down the road, but Evan, let's close off on this because I just realized we ran way over time. Let's talk about right now. Look, we're really at the bottom. This is the nadir of the market. Everything is like people have given up hope on everything pretty much. So let's leave the investment. What's the upside? Let's look at the possibility because you're looking at the future. You're looking at
Yeah.
where is the puck
Yeah.
going to be, and you
Yeah.
want to be. So what are the
So,
catalysts
so
right
there's a
now?
there's a number of catalysts,
Yeah.
Jack. The spin out is a big catalyst, right? Because you'll now have a pure play tech company that I think is going to do some amazing things in the market. I'm talking about ARTIZed maps, and sign up some big name brand accounts that we're already talking to. And when that happens, NexTech's value, our 10 million shares plus, will go up with that, and everybody will benefit from that on both sides of the aisle. But then you also have our 3D modeling business, which again is trying to continue. We're trying to continue to sign up big name accounts. We have landed some whales. We cannot announce the whales just yet. They're landed though. We have
In the house, they're in the boat. The
There
whales
is
are in the boat.
the contracts have been signed with some whales. I cannot disclose their names yet. I'm working on trying to get approved to disclose. I don't want to risk the relationship, but the catalyst is these whales are testing us, and they have the ability to really change the game for us. And so we're in this very, very interesting period right now where there's a lot of testing of NexTech's technology by very, 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 very big
How
e-com,
big is very?
the biggest of the
What does
big,
very
right?
mean?
The biggest of the big. And so with that, testing takes a couple of months. It's not like days. And after that test period is over, I'm not talking years, it's just a couple of months. We could see a very, very rapid increase in the demand that for our services. And if that happens, it'll show up in our quarterly. Even if we don't put out the press release, you'll see in Q3 and Q4 of 2022 a sharp spike in our sales. So there's a lot happening behind the scenes. There's a lot of testing, RFPs. There's some whales we're still chasing, but the biggest whale of them all, we have landed, and we are working on, at least in my view, the biggest whale. We are working on building that relationship, and once that relationship is um, fully formed, it's going to change things dramatically, and that will be a catalyst.
Also something else you mentioned, which I don't think people picked up on, is that you have more and more of these RFPs going out, right? So each one, or not or even RFPs, but actually just people signing up to for a
Yeah.
few models, whatever it is, or basically the sales funnel. So you have more and more companies coming through the sales funnel, which all of a sudden, like somebody who signs up now for, let's call it $100, when they actually, after they're done testing, if they want to go with it, yeah, that becomes 5,000 or 10,000, whatever the number is, it
Yeah,
becomes a big number.
yeah,
So
yeah,
it
yeah.
goes exponentially. It's no longer,
Yep,
so that's,
yep.
when are we going to see that? That's the thing that's
That's
going to be,
Q3, Q4 of this year.
okay.
That's when you'll start to see the beginnings of this really we can call exponential growth in
Mm.
our business. Is that really the first half of this year was foundational, building relationships. Our tech needed to be really battle tested, and it is still going through some of that. I mean, this is not easy stuff. There's, like I said, very few companies that do what we do. It's because it's difficult. This isn't easy. It's not like flipping burgers or making a pizza. This is very complex technology. And we are at the forefront and really pioneering, doing the pioneering work. We're opening up accounts, big accounts. Some of them are medium, some of them are small, but the big ones are there, and they do have the ability to change the trajectory of our business. It's not going to happen though until Q3, Q4 of 2022. So super excited, Jack.
Okay, so basically, so it's interesting. So this is something that we haven't really talked about, but yeah. So right now, the pipeline of business, it's all there now, and we're gonna see the real stuff come out. So we're talking about Q3. So by what calendar? We're talking about November, December time. You will see the actual. When
Uh,
will we actually see this
I
show
don't
up?
want to put a month on it.
Yes.
What I'm saying is that look, things are on track. We are locked in. We are in as good a place as I could possibly, imagine us to be. Like I couldn't script anything better. I mean, yeah, would I like everything to happen today? Of course. But that's just not the way the world works. So the world works like this. New tech, new tech company, small startup, NexTech. We invested, we've positioned ourselves, we're locked into this 3D modeling business. Okay. Big demand is out there. Big demand taps on our door, says, "Oh, you guys have what we're looking for, but we're not sure. You guys, we never heard of you before. We'll give you a shot. Let's see. We'll sign a contract. We'll buy, X amount of units. Let's ramp it up over a period of 2, 3 months. Over that period of time, they work with us hand in hand to be successful. Once we come out of these test phases, some of them are 30 days, some 60, 90. They don't usually go past 90. Once that happens, they say, "We love you. You're our partner. Here's, what we want from you over the next 12 months, 24 months." Right? And that's just the way it works in any, new industry. And so that's where we're at right now. Again, we're in a great position to be successful, and I mean, potentially wildly successful in this 3D modeling and AR-tized maps business. We do have to execute. We do have to deliver. We do have to impress these big accounts. But I could tell you that we have a team here of entrepreneurs. We've talked about this before. We have a number of people here from Deloitte. We have our CTO from Apple. We have our CFO from Ernst and Young. We have really smart people here, and they're working on delivering everything that I'm talking about. We have people from big tech, and so that's really the bottom line. Is that at the end of it all, Jack, it's about the people and delivering on this dream and weathering the storm. And from my position, I think we've achieved a tremendous amount in really the last 9 months. I think the future is bright, and I think over the next 6 to 9 months, we're going to achieve, I think, some spectacular results in our business. The market is the market. I can't really predict where the stock goes, but I think our business is set up for success, and usually one follows the other.
Excellent. And Evan, on that note, I want to thank you. Thank you, everybody, for joining us. We'll see you all on the next live stream, and hopefully we'll have every time NexTech comes back, there's always something new and exciting. This is adventure capital. This is the stock.
Adventure.
You're getting a lot of bang for the buck. When you own NexTech, you're getting like this entertainment value because there's always something new. You got spin-offs, you got all sorts of exciting things happening.
And you get Jack too.
And you get exactly. You get two for one. All right, thank you, everybody. Thank you.